Hey, it's Monday's recap time. Hey guys, how we doing? Let's go ahead and just jump into the charts and get right into it. We have a lot going on. We're kind of coming into the New Year's, so let's kind of see how things play out here, and we'll go from there. But we didn't have a lot of price action, but in the last 24 hours, we did have a little bit of movement we were talking about. So let's just go ahead and jump into the 15-minute and check some stuff out. If you ever have any questions, anything, go to Kabroda.com. Our site is up and running. We do have areas on there. We also have the GPT you can work with quite a bit. And then we're building out more stuff as we go. Do remember though that this is everything we're just guys, happy traders like everybody else. We're not telling you what to do. We're just kind of showing you what we do. And if you kind of want to follow along, that's your choice. Obviously it's all your stuff, just like everybody out there. Just all that weird stuff they got to deal with. But that's who we are. We're just talking faces here on TV, if you will, on your computer, in your ear, and then we're constantly sharing, just like everybody else is. We do have quite a bit of good stuff. But let's go ahead and jump on the 15 minutes. We have the 15-minute here. So I do want to point out we had the bigger area on here. I'm gonna go ahead and take some of this out. So we did have the New York or US market right through here is very quiet, coming in off of the weekly candle close, which we kind of talked about a little bit on that on the weekend recap. As the Asian market opened up, we did have a fair market value or fair market gap kind of expand a little bit through here, nothing big. It did run up, but as you can see, it did not get through this area. It could not do it. So it came on up and got through on a rejection off of this major area. So really, if you're looking at this, we are trading in this range from here to here. And if you're looking at this, where is fair price? And I'm kind of, let's go ahead and take a look at this, and really all it is just the Fibonacci retracement extension. That's all I threw up in there, and I'm just going from the daily support and the daily resistance. Well, this has been here for a while if you've been charting or following along. So price action is really getting tight in this area, and we just came out of that weekly candle close, and the Asian market said, hey, we're going to come and go after these stops up here. I'm sure people have been trading in this range and trying to catch these moves and putting stops in this area. That's why you kind of want to be marking up your charts and knowing where things are going. So one thing I will say, when you do know that where the ranges are and you can kind of build it out and see things, this is what's great to do. So right here you have your 0.5. So this is the middle of the range. So price action always wants to come back to the mean, which is back in the middle area, which is right here. Through here is just basically 0.5. Right now I label it at 0.75 and 0.5 just mainly because the directional is from 0 and going up to 1. But really these are the same distance from each other, and they're the same overall grid. So you're kind of looking at them at 4 quadrants. Everything is kind of built in all your indicators the same way. There's nothing special here. But when you're in the lower area, you could say, well, you're in a discount zone or you're in a premium zone. It just kind of depends on what the market is doing. Right now, though, you are getting pressure on the price action with the 200 and the 21 coming down on it. We're looking at the 15-minute that way. You also can be analyzing your 5-minute. You can see over throughout the day, our 20, 21, everything has gotten very tight, and all this pressure has been coming down on the price action. And then you're getting squeezed from this lower area here from the daily support. So price action, if it's getting squeezed, it's either going to want to escape, right? Nothing wants to get squished. So when pressure starts coming down on this price action, it's either going to run away from it and it's going to find the easiest way to escape, just like a rat or whatever. It's always going to be looking for the easiest way to escape if it's getting captured, like anybody, right? So if the bottom is weaker, it's obviously going to go that way, but if the top is weaker, it's going to shoot out that way. So if it starts to shoot out, you kind of saw that happen right through here. Price action started to squeeze and it shot out, but it couldn't get out of this top. Started to roll over, crashed down. London market went ahead and sold it all off. It had a fair market gap right down through here. On the sell-off came out very hard, and then we really just fell before the U.S. market opened. We fell down and found the bottom here on the daily trigger, the breakdown trigger. It pretty much bounced in there and then started to trade back up. So we just kind of snapped down. And this really, what would have been nice to see is it come fill this on the market. I would have expected at least a 50% retracement, but really it would have came back up into this area. So you can see that here is your quarter range, and we really just held that. That's also your breakout trigger for there. And think of the fair market gaps like painting. So like if you took a roller and you're painting on the wall, if you take your time, you can paint evenly and it's nice and clean. But if you're going very quickly, you're going to paint and there's going to be missed gaps and things. You're going to have to come back and repaint it. So fair market gaps are kind of that idea. It's the guy that's painting very quickly on the wall. He's missing spots. It's getting crazy. And that's why you see this big drop. Whew. So what happens is price wants to come back and repaint the wall is what you're going after. So they come back and repaint the wall and fill it. So it's either that's going to happen or it's also going to be a reject point and say, no, we're not going to come back and do that. So it did just start to trade out. So you are looking at this bigger window here, something like that. If that's your levels, you could be looking more like this as well. We'll have to kind of see with what this could drop down to. Right now, we need to see it break down in this area. Well, it does break down. I mean, everything. Every time things start to kind of roll back over, it always wants to trigger to that same zone. So here we are again, trying to look for that 83, 80, 80. That's kind of the call out here. Pretty common. So we did get an expansion out, expansion down. It did run down. Obviously, every time it gets down here, though, this is why to me, it's getting more compressed and why I'm watching it more, because when you're up here at the very top on the price action and on your indicator, when this ran down, it took all the energy to run this down. It took all the energy, and you saw it expand out on the RSI. The MACD did a big expansion out, and it's coming back together. The other thing, though, that's strange is when it ran up, you were topped out on the stoaches. That's a red flag. And then when you came down, you're bottomed out on the stoaches. Usually those would have flipped each other. And when you see that, that's when price action is a lot stronger to drop. Well, right now, you're kind of seeing that right now. Price action is putting pressure down here. And this has been rolling over. So we'll have to kind of watch. I mean, there is not a lot of... It's going to break soon. It's just a matter of when. And it's always better to wait. Don't get too crazy on yourself. Don't get like, I'm going to get in now and I'm going to get all this, whatever. This is going to dump. I'm going to get into this and dump it out. Let the market kind of tell us what it's going to do. Let it break out, and then it's going to trade in here and say, okay, well, I'm going to break out and come back and test, and then you'll see it move out. That's typically how trades work. So we'll have to kind of see what is going on. So that is about it for the recap. It's kind of the price action. Yeah, there was definitely not a trading day. You can see here is the market right here. So the New York AM, and then they had the PM here. It didn't do anything really during the premium areas. That's what's being marked out. One thing I will jump out and show you this real quick is this is your daily mess. And you might be thinking like, hey, what is this? This is crazy. Why are you showing me this? Well, I'm showing you this mainly because we're actually building out we're calling it the Wealth OS. It's actually a ability to kind of create an engine. It's definitely not going to be a bot. No, we're not doing that. It's dynamic type pricing. It does have some grid, but the idea is to help you build wealth. And that's the kind of the focus, to at least show you the area. Like we're never going to actually be able to do it because you have to be. There's all these rules and licensing behind all that kind of stuff to be able to help somebody, and you'll definitely never manage anybody's stuff, right? That's your own. It's always self-managed. But the idea of all this mess in here is there's a lot that goes into creating this, and I'm just showing you because this is some of the architecture that we're building out. And I know it does look crazy, but if you kind of look at this, you do have your big macro, the big run in the market, and that's what we got here. So this was the crypto space coming down, and then from here we had some big expansion going up. and now we're topping out. People would say. The reason why you're probably not really topping out yet is because you have your macro Fibonacci levels, or how you want to look at it. That's going to be calling your top. Well, you might say, well, how do you know it's the top? Well, when the 21 basically crosses over your 200, you can backtest this. You're in a pullback, and then that's going to be your macro type top. And they're constantly. You can see I've circled them through here. So this is with the first run up. It crossed here. That was the top, right? Then it broke back above. It's just the opposite. It crossed back above. It ran up. And that now became your new bottom. This was the bottom, and there's you can see how it's stair stacking. Well, you don't know this is the top yet till the 21 crosses the 200. Once it crosses, well, boom, that's your new top. That's the new top, and that also goes back to this area. So now you've kind of covered all this territory's all been wiped out. You've gotten back through the trauma, and now you're trading back down, and then you cross. So now you say, well, where's the bottom? Well, when it crosses back over and starts to head back out, you can call your bottom, and you can mark these levels out. But really with the macro trend, you're always kind of moving. At one point, this was down here, right? And then once this confirmed, we moved it up to here. And then once this got made and it confirmed it down here, you moved up your stop here. So you might be like, who really cares, right? Well, the reason why I'm telling you that is because now you're in this is current price action. So you might say, okay, well, what's going on? Well, you can see I circled this, and basically this is circling the energy back here. So 0.5, the market wants to go up at some point and then come back to its mean, back to the mean. No matter what time frame or how you're building this, it always wants to come back typically to the center point, the halfway point. So right now, if you run out your Fibonacci, this is that 0.5 that it wants to pull back to. So now, if it comes here and starts to trade down, look at it this way: this is fair market value, this is the prices on sale value, and this is on clearance value. So if BTC starts to go down here, and if you believe in the asset, which if you go back and backtest any large asset, anything that has any strength, this is classic. This is what you'll see. So all these other levels that you see on here are in the micro moves. So you have this micro up run, and we're currently in a micro bearish run. So we are in a bearish settlement, and how we're going to get out of that is when the 21 crosses back over this 200. Which you might be thinking like, well, it's going to take forever. Well, not necessarily, because you're going to run this where these 7s are. This is a Fibonacci line in here. And once we knew this top was here, we already knew this bottom was set. So then we could run the Fibonacci from here back to this area. And from there, we can actually chart this out using fibs. And there's some other things that you can look at, but it doesn't really matter. It's just basically giving you levels. Well, if you look at the way Fibonacci works, you're looking at the 0.786. You're sitting in that zone right now. You also have, this is why this is powerful and why we're building this out, because if you use all this energy together, you can see how the extensions react when you extend your deviations, if you will, where it's going to expand to, and how you can use all these areas to help chart everything that we're at right now. So as long as we basically stay in this level, which people have called that out, it's not, rocket science, a lot of it's set up. As long as we stay above this current area, that's pretty good. But if we really want BTC at a sale or a discount, that actually hurts structure. Ideally, obviously, we want this to run up, and you can see all these numbers up here. These are all extensions based on all these moves. So if you're turning around and saying, well, where could this extend out to? BTC could extend out to a lot of different areas, but it could extend out to these different extensions right through here. Really, you're looking at probably 160 to 250 range would definitely have some extension. The other plus is as I start to move that out, you can see that this 0.5 that was down here now is up in this area. Also, the other areas that we're talking about, the good sales and clearance, they're all moving up as well as this price moves on up, which actually keeps BTC in a nice movement, even if we go into that crypto winter. But regardless, when it's all said and done, I'm just showing you this, guys, so you know that when we're working on something, we're working on something. So this is the architect that we're building for a whole engine that's going to be built into Kabroda.com. And inside Kabroda.com, you can just basically click on a button, and it's actually going to help you grid out kind of when to be buying in BTC when it's cheap. Like right now, would be considered cheap, right? So you could be buying here and then be selling when it's coming up and topping out, if you will. You could sell a percentage of it. Or if you have capital that you've saved up, when do you deploy it into the asset? Well, that's the same idea. That's what everybody always asks, is how do you deploy, into the asset? Well, you could just dollar cost average in. That's simple, right? For every weekend or every Friday or whatever you decide to do, or twice a month, you just DCEA in. Nothing wrong with that. That's not a bad idea. But if you're trying to say, hey, you know what I want to get into the prime real time. I don't really care. I'm going to be doing this for the next 10 years, 20 years, or whatever. The next 5, whatever you decide, you want to get in when it's on the premiums. You want to get on the cheap when it's cheap. That's when it's cheap. That's when it's cheap. It's cheap. It's cheap. When it's pulling back is when it's cheap. So, all right, guys, I'll leave you with that. That is about it. This chart's a little cleaner, so we'll take a look at that. This is a nice trading chart. You can see that we are looking for possible pressure down. We'll see if it plays out this time. And we can go ahead and start looking to get some action. It'd be nice when it starts to happen again, because, yeah, I'm sure everybody's getting bored here. But, all right, guys, yeah, enjoy the New Year's. Be safe. And we'll continue to work throughout this week on some more recaps and watching kind of price action. See how it's going to break these big levels that we've been kind of talking about. And we'll see how it works. But, all right, guys, we'll talk to you guys soon. And we'll see you in the next recap. See you guys later. Bye.